Good afternoon. You're listening to Gambling with an Edge. Now here are your hosts, Bob Dancer and Richard Munchkin.
Good afternoon. Welcome to Gambling with an Edge. I'm Bob Dancer.
And I'm Richard Munchkin.
In one of our irregularly scheduled podcasts, today we interview gambling tax expert Russell Fox in an episode primarily dedicated to how the new tax bill affects gamblers and what we can do about it. Russell Fox, welcome to Gambling with an Edge.
Glad to be here.
Glad to have you here. Let's get right into it. How does the latest tax bill affect gamblers?
Well, the bill is actually, the portion on gambling, incredibly simple. And roughly 95% of gamblers, but not 95% of your listeners, won't be impacted. For amateurs, take your gambling losses, multiply by 90%, and those are your tax gambling losses. Further, gambling losses remain only deductible up to the amount of winnings. Effectively, if your gambling losses are 111% of gambling winnings, you will not be impacted by this law, or more than 111% too. Most amateur gamblers lose at least 111% of gambling winnings. For professional gamblers, gambling-related business expenses are considered in the same category as losses. You only get 90% of them. This law will especially hurt high-volume, low-margin gambling. Sports betting and certain advantage play, unfortunately, will be hit. Under this new measure, which goes into effect for the 2026 tax year, does no impact on 25, a contemporaneous gambling log is a must, either written on paper or using an app. Gamblers who use the session method will be less impacted than gamblers who don't. Additionally, neither the IRS nor the tax court have any sympathy for gamblers who don't have a log.
As a video poker player, I play perhaps 1,000 hands per hour. Some I score on, some I don't, some I break even on. In some games, sometimes I collect less than my initial wager. At the end of my session at a particular casino, I record my score, plus or minus, along with any W-2Gs accumulated. How is this recording system affected by the new law?
It's not. That is exactly what you're supposed to do, other than you have to use the session method. It's allowed for various court cases, such as Park v. Commissioner. What you leave the casino with, less what you began with. Let's say you have 20,000 of W-2Gs for the session, but your win is only $3,000. You need to note both, along with all the other required items for a gambling log. Date, casino name, start and end times, result, game you're playing. And if you ever play a table game, the table number. When you prepare your tax return, you will need to note that you have 20,000 of W-2Gs because you have to match what the IRS has on file for you. And you take as an adjustment income the $17,000 of gambling losses in the same session. You probably are going to need to attach IRS Form 8275 to your return. That's a disclosure statement. And then you're left with your $3,000 of gambling winnings.
Okay, so what about, say you're a sports bettor and you bet, on 8 or 9 different football games in the course of a day. Maybe you also have some parlays in there. Maybe you add in some in-game betting during that, and you make these bets at 6 or 8 different sports books. Is that day your session? Is every sports book a session? How does a sports bettor deal with this?
Well, we don't know for sure because there is no case law on sports betting. Sports betting has expanded drastically in the last few years. It takes a long time for cases to make it into the court system. So with nothing in the definition of the tax code, we have to use both the dictionary and common sense to determine what we can combine into the same session for sports betting. First, the idea that a session is going to last the entire year or month is laughable. That has no chance of being upheld in an audit. Don't try it. If you try to say, oh, it's the entire NFL season, baseball season, whatever, it is not going to work. But clearly related wagers should be part of the same session. Consider betting on a baseball game at Wrigley Field, with the wind blowing out and the opposing pitcher being a notorious fly ball pitcher, while the Cubs pitcher is a ground ball pitcher. Betting on both the Cubs and the over for runs being part of the same session makes sense, and probably can be combined. But betting on the Cubs game and the White Sox game, unless they're playing each other, likely won't be part of the same session. When a statute is undefined, courts look at the dictionary definition for guidance of the meaning of a word. One of the definitions of session is a single continuous course or a period of lessons, study, etc., in the work of a day at school. Another is a period of time during which a group of persons meets to pursue a particular activity. Both imply something with a discrete beginning and end. The IRS Chief Counsel's Office came out with a ruling about re-entry poker tournaments a few years ago. They concluded that each tournament entry has separate conditions and you cannot aggregate one player's results. Now, they were writing this for casinos, not players. But the problem is, for both DFS and sports betting, wagering on today's slate of baseball games has nothing to do with wagering on football games in November or even today, or WNBA games. I suspect that both the IRS and courts will rule that nothing in sports betting and DFS except directly related wagers can be aggregated. Having said that, that's in the future, likely some date beyond 2030. That means I think it may, underscore the word may, be possible to lump a day's bets into one session, especially with online betting for an active bettor. Somebody who's betting every day, it makes some sense. But will the courts uphold it? Nobody knows.
Can we skip back? Your last question on my video poker you posed, I had 20,000 in W2Gs with a $3,000 win. And then you said that means I had 17,000 in losses. Does that mean, according to the IRS, I had 20,000 in wins because that's what my W2Gs were?
No. The session method is allowed. Courts allow it. The IRS Chief Counsel came out with an opinion that says it should be allowed. So in this situation, what you would note is 20,000 of gambling winnings. If you're an amateur gambler on other income.
And it's only 20,000 because that's what the W2Gs are.
Right. We're just matching the W2Gs here because the IRS matches them. If you put down 3,000, you're going to get an IRS notice. We don't like IRS notices. Then below, there's a place for adjustments. It's line 8Z as in zebra on Schedule 1. You're going to put minus 17,000, gambling losses in same session. And I would advise an amateur gambler to also attach Form 8275, which is a disclosure statement noting what's going on. If that ever got to court, and assuming good records, that gambler is going to win because the courts allow it, the IRS allows it. Key is you need good records. It's essential.
Okay. Now let's go to slot players, advantage slot players. These players, let's say they stay in one casino for the day. They may play on 30 to 100 different machines. They walk around until they find a machine in what they consider a positive state, and they play it somewhere between 1 and 10,000 hands. Has a result. Now they go to another machine looking for a game in a positive state, etc. Is each physical machine a session? And does each physical one need to be recorded separately? This is a huge burden on somebody who played 100 machines a day.
No. They can be lumped together with some caveats here, but the way the courts have looked at it is, if I walk into the casino and I start the day with, say, $10,000, and I play various machines, and I leave the casino with $12,000, I have a $2,000 win. That's how it's described in Park v. Commissioner, and that would be applicable to an advantage player playing multiple machines in the same casino and in the same session. You can't, like, go in the casino at 10 in the morning, leave at noon, go back at 4 in the afternoon, and leave at 6. That would be two different sessions.
And that would include table games as well. So if that same slot player occasionally jumps over and jumps into a hot blackjack shoe, he's working at that casino all day long without leaving the casino.
That is probably not able to be combined because it's a different game. The way it's written, the way the description of a session is game you're playing. If you're playing video blackjack, which of course is never going to be advantage, but who knows?
Don't count on that.
Yeah, maybe there's some sort of weird promotion or something, but assuming, true odds, video blackjack wouldn't be most machines, that could be combined, but a table game by definition is separate. It's like a poker player playing a poker tournament, busting the poker tournament, and then playing some cash games. That would be two different sessions.
Okay. In the slot example, you said you enter the casino with $10,000, you leave with $12,000. That's a $2,000 win. What if you had 5,000 of W2Gs in that same session?
You always have to note your W2Gs. Always. Okay? If you have a session log, the way we tend to do it, and most tax professionals who specialize in gambling is, we need, what is your total of W2Gs for the year? Let's say it's 100,000. Then we need your session win total. Let's say it's 80,000. Well, we're going to have to, in this case, we would put down, for an amateur gambler, W2Gs, 100,000. And then below, gambling losses in same session minus 20,000. Same sessions, excuse me. For a professional gambler, we generally, would do the same thing today because this law, again, does not go in effect until 2026. On a Schedule C, we put down W2Gs 100,000, gambling losses 20,000. We get to the right result. Always want to match the IRS numbers.
So I, for one, am very optimistic that this law is going to get amended. There are already, people putting up amendments, Titus from Nevada, and the fact that they're talking about it on mainstream news as something that's bad, I think. So I'm optimistic, and I'm wondering what your take is on whether you think this will be overturned.
It will be overturned if the AGA and Indian gaming interests want to expend the political capital. And I don't think we know the answer to that yet. Certain aspects of it, I think they're going to, first of all, there's new tax law every year. So is there going to be another tax law later this year or early next year? Absolutely. Do I have any idea what's going to be in it? Of course not. Nobody knows today. There are rumors there's going to be another reconciliation bill. There's something I wrote about today that really says, please have a technical bill, basically a bill to fix things. Those are generally bipartisan. Whether that happens, nobody knows. These are all likely, but who knows? The problem is Titus's bill is unfortunately not going to ever go anywhere because she has a D behind her name. This is going to take Republicans. I urge everyone who does not like this bill, which I suspect is about as close to 100% of your audience as possible, if they have a Republican congressman or Republican senator, to very respectively be nice, write them, email them, and let them know your displeasure about this portion of the bill. It's a $1.1 billion revenue raiser over 10 years. There's a line I love from the late Paul Volcker, who was head of the Federal Reserve. Whatever you tax, you get less of. I am convinced this will not bring in $1 billion.
Over 10 years.
Period.
Yeah. Yeah.
And it is horrible for sports It's horrible for sports betting. It's horrible for the states. It's horrible for the Nevada casino industry. It's just bad, but there's plenty of bad laws on our books.
And something people really need to be aware of, and that is, even if they do come up with an amendment, say next year, that doesn't necessarily mean that it goes into effect for 2026. So you're really gambling if you decide to gamble in 2026 on the idea that, they're going to fix this, because it may not take effect until 2027, even if they do get it through.
Well, we may have an idea by the end of the year, too. One of the issues right now is, my guess is AGA is going to survey their members about this, and Indian casinos also. This bill passed only a couple of weeks ago, was signed into law on July 4th. We're recording this on July 15th. That's not enough time. The rumors are there's going to be another reconciliation bill later this year, probably in like the September-October timeframe. That is probably where we will see something, if we're going to see something this year.
Okay. 1099s. Sometimes casinos issue 1099s for various wins. Are these affected by the new law?
Yes. Beginning in 2026, the 1099 threshold was increased to $2,000 for most 1099s, including gambling-related 1099s.
Right, but so people need to realize that 1099 is not a W-2G. Those are two different things. And the 1099 threshold went up, not the W-2G. But there's also that threshold on 1099 is only for the withholding, right? Not for the...
No, the 1099 threshold, if, for example, you win a casino contest, that's where you get issued a 1099. Though that threshold was increased to $2,000, period. And it's indexed for inflation. So beginning in 2027, it will go up from 2,000 to something, assuming we have some inflation. The W-2G backup withholding threshold was increased to $2,000. However, the W-2G issuance threshold was not increased. Therefore, if you have a slot win, you pull the handle, so to speak, on a slot machine, video poker, and you hit a $1,300 jackpot, you will have a W-2G issued. If you refuse to give your social, which is not a great idea, you will not have backup withholding because it didn't reach the $2,000 threshold. That's how I read the plain language of the law, and the plain language governs. Again, a technical corrections bill could be in the future to increase both to $2,000. It would be welcome, because that $1,200 slot threshold was, I want to say it dates to the 1970s or even earlier, way before my time.
Yeah, and this idea that you can refuse to give your social and they'll take withholding out, most casinos, they don't know the law at all, and they will just refuse to pay you. So yeah, that's not a good idea to try to tell them, no, I'm not giving you my social on a W-2G, unless you're willing to just walk away from the jackpot entirely.
You also walk away from any credit you have on the machine before the jackpot hit.
Yeah, right.
Correct. The idea that these two thresholds are different make no sense. And as I think I mentioned, a technical corrections bill for things like this normally happens, but our Congress is pretty polarized.
CTRs, usually issued when you have more than 10,000 in cash transaction in a day. Are they affected at all by the...
No. CTRs are part of the Bank Secrecy Act. Nothing in this law changed. Well, there's a couple things that were changed, but nothing regarding CTRs. Also, has nothing to do with wins and losses. They're just movement of money in and out. So you could have a losing session and have a CTR issued if, turning in more than $10,000.
Okay, in 1987, there was a Commissioner versus Grutzinger, a Supreme Court decision that established gambling income could be considered a trade or business, and thus losses are considered an expense against revenue. This new law changes that?
No, with expenses are always allowed for anyone in business. All ordinary and necessary expenses are allowed up to the are allowed. Now, for gamblers, what has changed is that expenses are limited to 90% of actual expenses. So if your expenses total $10,000, they're all ordinary and necessary, and this is after any other limitations. For example, you only get 50 cents on the dollar for meals. You would get $9,000 of tax expenses.
But your combined losses and expenses together still can't go higher than 90% of your wins, correct?
It has nothing to do with wins. It has to do with actual losses. So suppose we have a professional gambler, has 100,000 of gambling wins, 100,000 of gambling losses and business expenses. He will report 100,000 of wins and 90,000 of losses and business expenses. Let's take another professional gambler who has 100,000 of wins and 20,000 of losses and business expenses. They'll report 100,000 of wins and 18,000 of losses and business expenses. Let's say we have another professional gambler who has 100,000 of wins and 110,000 of losses and business expenses. He will lose $11,000 of losses and business expenses because they're limited to 90% of actual. They're also limited, by the way, to the amount of wins, but in this case, they'll end up at $99,000, and he will pay tax on $1,000 of phantom income.
We've talked about relatively small amounts of W-2Gs. Big players can easily get $5 or $10 million of W-2Gs, or have in the past. I've done that many times when I played in high limit rooms. This law seems to be the death of high limit rooms. Players might do it 1 year and figure out they have this horrendous tax bill. They had no idea that it was happening. And then you just can't play that way anymore. You can't play $25 machines and get all the W-2Gs, or $100 slot machines. You just get tons of W-2Gs, and people have to stop playing those. Is that fair?
Mostly it is fair. The issue, again, is not W-2Gs. It's session results. Now, first, I'm going to point out the obvious. Most amateur gamblers don't keep session logs. And so they're going to be blindsided by this. It's, somebody who goes in, again, a losing gambler is not impacted. So to a certain extent, if we think about it, the high limit rooms, I would guess, just like any other form of gambling, at least 90% of the people walking in there lose big. And therefore, those people are not going to be impacted. You still get, 90% of your gambling losses. And if those gambling losses exceed 111% of your wins, nothing has changed. But as far as professional gamblers playing high limit rooms, absolutely, it's going to have an impact. Anything that has large dollars, low margin is hit under this bill.
Yeah, and sports bettors are even more impacted than video poker players. It's easy to have $20-50 million worth of turnover in the course of a year. And, if your return on investment is, 2 or 3%, you could end up owing millions of dollars in taxes on, not that much income.
I agree. I think sports betting especially is really going to be hit. Another key question, which again, we don't know the answer to yet, is how will these sports betting companies, here I'm considering companies that really only do sports betting, DraftKings, FanDuel, look at this bill? They do not want professional sports bettors. They have limited people right and left. If they discover that Russ Fox is a professional sports bettor and uses DraftKings or FanDuel, I will be limited to basically 2-cent bets. But what are they going to do? Because it still hurts their volume. It hurts the amount they're going to collect. And we don't, again, the law is too new for us to know the answer. I suspect they're probably very neutral on this bill because they do want to get rid of professional sports bettors, but they don't like the idea of what's going to potentially happen long term. That's a guess. I have I've not spoken to anyone at either company. I have no idea how they feel. I've not seen any public statements from them, but I assume sooner or later they're going to be forced to make one.
Well, I think they're a little short-sighted in that those are publicly traded companies, which means if suddenly their handle goes down, they have to justify that to their shareholders and to say, oh, well, we only got rid of the bad money that was coming in. I don't know that shareholders are going to buy that. I also think they're very afraid that it's going to drive more and more people offshore. And even the recreational gamblers are going to start hearing, even though the tax thing doesn't affect them, but they're going to hear that their taxes are going to be worse and take their action offshore. But I mean, as you say, we don't know what's going to happen there. And the sports books are much more concerned with getting iCasino. They make so much more on the internet casino gaming than they do on the sports betting. So if they think there's something in their calculation that might affect iCasino, then, that may have something to do with which way they try to push.
It's just, frankly, too early to know.
Yeah.
Is there any distinction between U.S. citizens and non-U.S. citizens with respect to this bill?
Yes, there is. Non-U.S. citizens who are permanent residents are taxed just like U.S. citizens. Those individuals are in the same exact boat as you and I. However, non-resident aliens are generally not taxed as U.S. citizens unless they meet what is called the substantial presence test. And also, so a non-resident alien is not impacted, generally. Finally, only non-resident alien professional gamblers conducting a business in the U.S., those individuals, of which there might be 2 in the entire country, are impacted. But in general, a non-resident, like someone who came to the World Series of Poker, playing at the World Series of Poker, then going home, he or she will not be impacted.
So he doesn't owe tax on the money he earns at the World Series, assuming he's in a country with a tax treaty.
If he's in it, like he's from the United Kingdom, comes here for 2 months, plays, goes home, the UK-US tax treaty says there's no withholding on gambling, he gets all of his money. No impact.
Gambling wins and losses don't affect him?
Not impacted. Under the U.S. code, which is law, and the U.S.-UK tax treaty, and treaties are considered law, an individual from a tax treaty country faces no withholding. There's a list of them. They're mostly in Western Europe, but it's not all countries. If you're from the wrong country, for example, Switzerland, you have 30% withholding on anything that generates a W-2G. Those individuals get a Form 1042-S. Now, consider, for example, somebody from a tax treaty country who earns a W-2G, poker, slots, video poker, whatever it is. They still get a tax form. They get a Form 1042-S, but it will show 0% withholding, assuming they have what is called an ITIN, an individual taxpayer identification number. Some casinos in the U.S. issue them. Some don't. If you go to the wrong casino and you don't have an ITIN, you will still have money withheld, but you can get it back.
So what about, I know that if you are an American and you move to another country, say Canada or the UK, you still owe tax on the money you earn in the United States, or if you're not living there a certain, 11 months of the year or something, there's some amount of time you're allowed to visit. But how hard is it to actually renounce your citizenship and become a citizen of Canada or UK and not have the tax situation?
Well, there are actually two things in your question. First, a U.S. citizen owes tax on their worldwide income. A U.S. citizen living in Canada or the UK has to report everything. Now, some things can be excluded via something called the foreign earned income exclusion. There are also foreign tax credits. Generally, a U.S. citizen living abroad earning an income from wages will not owe U.S. tax if they're in a high tax country, which definitely Canada is, UK is as far as wages. If they're in a low tax country, they may owe some tax. There are some countries, for example, I always get this wrong. The Baltic countries, Latvia, Lithuania, Estonia, one of them has like a 10 or 12% income tax rate. Well, an American working in one of those countries is going to owe U.S. tax because the U.S. tax rate will generally be higher. Renouncing citizenship is a legal process. It's involved. It is something that if anyone wanted to do that, they need to consult an attorney, not an attorney. There is a form you file if you renounce citizenship because the U.S. has an exit tax. If your assets are over a certain amount or your income is over a certain amount, you generally have to continue filing tax returns for 10 years, and you may owe U.S. tax for an additional 10 years. If your income isn't that high or your assets are not that high, you file the form. And by the way, this form is filed under penalty of perjury. Somebody got in very deep trouble for claiming he was worth about $500,000 when he was worth $16 billion. That doesn't work well. I do not
That's a
advise
rounding
that.
error.
It was a rounding error.
Yes. He ended up paying the exit tax along with penalties and interest in lieu of jail time. He had made a flight from a country which didn't have an extradition treaty with the U.S. to one that did. Oops. But I have filed this form twice for clients. As long as you do it and you're, doing it, accurately, and in both cases, both clients were what are called accidental Americans. They were born in the U.S. They had citizenship in another country. They were both average individuals, middle class, earning wages. They didn't have billions in assets and they didn't make, tremendous dollar amounts of income where they would be subject to the exit tax. Anybody who is subject to the exit tax, I would immediately refer to an immigration attorney.
Are there any company structures such as sole proprietorships, partnerships, LLC, etc., that would receive more favorable treatment under the new law compared to another company structure?
Not related to gambling. However, for certain other business activities, potentially yes. I expect a slight increase in C corporations in the future. Again, has nothing to do with gambling, but my initial reading of the law is there are some tax advantages potentially for C corporations in the future.
Early in this administration, maybe still, there was a Department of Government Efficiency went around and, among other things, fired a lot of federal employees. Presumably, this includes a lot of IRS auditors. Does this imply the chances of having your taxes audited for your 2026 return are lower than they would be for your 2024 return?
Well, I would say one thing to first say is audits don't happen when you file your return. Let's assume you file today on extension your 2024 return. That return's filed today is in the middle of July. An audit would happen between the middle of 2026 to the middle of 2027. Audits happen a ways out from the date you file your tax return. So we don't know what's going to happen for 2026 returns because we're dealing with stuff that would happen in 27 to 28. And nobody knows what the IRS workforce is going to be then. But generally, yes, I expect audits to go down because there are just fewer people at the IRS. The IRS has lost in various departments between 10 and 30% of their staff. Now, that is going to also be not good for tax administration. And there needs to be some audits. It helps with tax compliance. I hate to say that, but it'd be nice if everybody told the truth on their tax returns, but I'm not naive. There was something that came out this morning where an individual who's a former person very high up in the IRS expects another 10 to 40% of IRS employees to leave this year.
Wow.
That's a lot. Now, the IRS computer system is ancient. It dates to 1959. You heard me correctly. It's before I was born. And, I'm going to be eligible for Social Security in a few years. So it's old. Think punch cards. By the way, if anybody listening is a COBOL programmer and wants a job, the IRS will hire you right now. You have to go to Martinsburg, West Virginia. I have no idea where that is, except it's in West Virginia, but that's where the main IRS computing center is. However, one of the things that happens, the IRS sends out a lot of automated underreporting unit notices. These are where the IRS match things up. For example, you have $1,000 of interest income from a bank and you don't put it on your tax return. The IRS is very good about matching those things. And you get an automated underreporting unit notice saying, you don't think you included this. Sometimes you have and the IRS computer just doesn't see it. You type Bank of America and you accidentally made a typo. And so the computer didn't match it. And you just point it out. And, I expect a lot more of these notices in the future. The IRS is going to see a lot of W-2Gs. People are going to use the session method, not attach disclosure statements. And the IRS is going to be sending out a lot of these notices. And there's going to be fewer staff to deal with the responses. That's going to be an issue.
I mean, isn't somebody, take a recreational gambler that gambles a lot, aren't they reporting that wrong if, let's say that they had 50,000 in W-2Gs and they lost a total of 70,000 or whatever. And what you're saying is you put 50,000 in the wins and 70,000 and go offset it with the losses, 90% of 70,000. But aren't they actually, because those people some days won, so they actually had more than 50,000 in wins than just the W-2Gs. So shouldn't they be putting, I had 80,000 in win and 120,000 in loss?
It's possible they have more. It's also possible they have less. Okay, your W-2Gs do not mean that's your session total of wins.
No, but on some days people win. If they're a slot player, they.
Oh, absolutely. But here's the thing. If they have 50,000 of W-2Gs, what's the total of their session wins? If it's more than 50,000, yes, they need to add to their wins another 20,000. Okay? If it's less, they can subtract that as an adjustment to income. It'll be both ways. There are people who have 50,000 of W-2Gs and 150,000 of gambling wins. And there are also people with 50,000 of W-2Gs with 5,000 of gambling wins. Both are possible.
Yeah.
in many cases, people will just, okay, I have 50,000 of gambling of W2Gs. I lost money. I lost more than 111%. So I'm just going to put down 50,000 of tax gambling losses. I'm going to be fine. Is that technically correct? No. Is it accurate? Or change the tax? Probably not, but it could in some circumstances.
Changes their adjusted gross income, right?
Yes, but it may or may not change their tax. It all depends.
I would guess this law is going to increase the dishonest reporting among a large number of professional gamblers. Now, obviously, dishonest reporting is something you're very much against, but would you suspect that I'm right in this?
Yes, I'm not naive. People are, a gambler who loses and a lot of people are going to play audit roulette. I can never advise such actions. I'm licensed, and I always have to suggest compliance with our tax laws, but I'm not naive.
So, Russell Fox, thank you very much. If any of our listeners wish to get a hold of you for tax or other consulting reasons, how would they do that?
Easiest way is to send an email to rcfox@claytontax.com. Be advised that if you're interested in us preparing your 2024 tax returns, would be on extension. Probably not doable. We're close to at capacity for this calendar year, but for next year would probably be still doable. That's 2025 returns, the year we're in, filed in 26.
Thank you very much.
We'll put a link for a link to your website and to your email in the show notes.
And is it also true, Russell Fox, that if this tax law changes that you'll likely report that in your website, taxabletalk.com?
Oh, yes. If there is if for example the law gets changed, I will absolutely report it. I'm still digesting all the provisions of this bill. The bill itself is, I have it up. It is 330 pages of fine print.
I thought it was over 900 pages.
It is showing it's shrunk it. In the format, it's probably 900 pages at about an 11 font. As printed by the U.S. Government Publishing Office, it's in like a 4 or 5 font.
Oh, geez.
It's tiny.
All righty. Thank you very much, Russell Fox. Thank you, Richard. Go out and hit lots of royal flushes, everybody, but do it this year, not next. Thank you. Goodbye.